right. What is up, everybody? Divinehood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Happy New Year's Eve to everyone. We are streaming today, taking a look at Bitcoin, taking a look at the crypto market, bringing in the new year. So, welcome in. Thanks for joining the stream. Yeshwant, welcome in, and much love to you as well. Lost X, welcome in. It's good to see you. Mr. Shun, welcome in, and happy new year to you as well. Full port, what's up, man? Welcome in. And R Pink, thank you for being here. Thank you for modding. Happy new year to you as well. I hope you guys all ring in the new year, having fun safely, everything like that. And we'll hit it next year and make these gains. So, guys, Bitcoin did see a little bit of a rise from yesterday's drop. We saw a little bit of a drop yesterday, and I told you guys I was in a short from around 89K with the stop above the local high. I still am in that short. But we got this little bit of a kind of a three-wave corrective move up, really quite up to the 886. If we pull that Fibonacci here and we turn on that 886 Fibonacci, you can see we didn't quite hit the 886 Fibonacci, but between the 786 and the 886 Fibonacci, hitting the 786 Fibonacci for sure, and it created a lower high, and then we're starting to dump now. So you can see we tapped that 786. We're starting to dump here. And like I said yesterday, the most likely scenario for me is that we are going to come for that liquidity around $86,300. If we look at our liquidation heat map, you can see even locally that liquidity resting down below the 86.5K lows. And those are these lows from Monday. And yeah, from Monday, we have the lows from Monday. But really, I'm looking at taking out all of these little local lows in here. This guy, and these two guys in here. So pretty much coming down to sweep out that liquidity at 86.3. And then we'll see what happens because we are going into holiday range type price action and weekend holiday price action. So this range here might continue through the new year and even, through the weekend. So if we're going to play this range throughout the weekend, knowing that we could see some bigger breaks, I think it was last year or at the start of the bull market. Let me zoom out here real quick. At the start of the bull market, right as soon as January hit, we started seeing some volatile price action for Bitcoin. So it might happen again this new year. If you look here, it was right here on the first Sunday, Sunday the 1st, January 1st of 2023, and then literally coming into the new year, as soon as the week opened, we really started to kick off that big pump for the bull market. So let's see if something like this is going to happen again in this 2026 year. But we're in a little bit of a different situation. We had been in a bear market for quite some time. We were at some major support levels with some major bull divs on the chart. And that is when we got that big push to the upside. Now, we have been in a bit of a downtrend for a few months now. But this is a completely different end of the cycle, in my opinion. We're closer to a bear market than a bull market. So, but just knowing that the beginning of the year can often kick off volatility. We do know that the bigger institutions take the end of the year off as far as trading goes. The quant firms take the years off as far as trading goes. And then once the new year starts back up, they really get back into it. But knowing that the new year is on a Friday, they might just wait until the next Monday comes. So, I'm looking at trading this little range, just scalping, still being in scalp trades. Earlier today, I did post in the Telegram how Solana was coming up to our resistance, hitting our value area high, our golden pocket. And we did have some bear divs on the chart on the 15-minute. We had some bear divs on the chart. And I did end up taking a scalp short from that area. I'm about, I think it was like 126.9. I am in a short from 126.9. So I'll cover Solana as well because I'll probably take profit at the lows of the range. We have a naked weekly point of control and a golden pocket down there and some liquidity. I'll cover that in just a bit here. But still in just playing scalp trades, guys. That's what we have right now. That's what the market is offering up to us. And so if you are looking at trading, I would keep a focus on smaller trades, taking profits at these like internal levels, internal support levels. So nothing really has changed from yesterday for Bitcoin. I still expect us to come down and take out that liquidity around 86.3. And I expect this range or the bigger range to continue through until next Monday. And guys, that's about it, man. Like there's nothing else, you know. So if you're interested in scalping, you did have an extra opportunity today. If you missed the short yesterday, you did have an opportunity to short up in this area. Once we tapped the value area high in the 786, you could have looked for a short in this area. If we go zoom in here onto the 15-minute chart, on the 15-minute chart, we saw that NAMI was confirming the bear divs as we were coming up to hit that 786, and the money flow had topped out and was coming to the downside here. Now, Market Cipher B did have bear divs as well, and the money flow was coming down as well. So you see here higher highs in the price action, lower highs in the momentum waves, and your money flow was topping out and draining as you were making that last high, attempting to break out of the value area high. So not much confirmation to take the short, but there was a bit of confirmation to take the short. And we're just hanging around the POC right now, hanging around the POC. But overall, this move that we saw from Monday is likely to be a three-wave corrective move. And this all could still be part of a bigger impulse to the downside to come down to take out 86.3 or come even a little bit lower here. There is another scenario where we could be in another complex correction for the week. A three-wave move here. We might see a three-wave move here, still staying within the range, and then we could get another three-wave move up, just continuing the range. We'll just keep an eye on this as, you know, as we lose certain intraday levels here. But good evening, everyone. Dr. X, welcome in. Sad2725, Happy New Year to you as well. What is the indicator down? This indicator down here below Market Cipher B is called NAMI trading. NAMI is NAMI. And NAMI is a really great indicator. It's a momentum and money flow indicator. It gives you the divergences on the chart. So if you're not too good experienced at seeing those divergences with your naked eye, it really is helpful for that. It also gives you the hidden divergences on the charts. Money flows based off actual money flow. Market Cipher B is kind of an algorithm of money flow, and the momentum waves are a bit quicker. So for scalping, NAMI is, in my opinion, a little bit superior to Market Cipher B for scalping. If you're interested in getting NAMI, I do have a discount code in the description of the video, and the link, if you use my affiliate link in the description of the video and the discount code, which is Divine50, you can get 50% off NAMI. It is a paid indicator, but in my opinion, guys, if you are going to be seriously a real trader, you want to invest in the tools of the trade that will help you succeed. You know, for instance, if you're a plumber, you're going to invest in the proper tools to help you succeed in that industry. So for me, Market Cipher B and NAMI are the tools that I use for confirmations to enter and exit trades. You know, first, I always have taught this: price action first, indicator second. So what I mean by that is you want to mark out your key levels. You want to go in whatever strategy you use, whether that's smart money concepts like order flows, order blocks, things like that. Or you can, you know, Fibonacci's, you can, whatever you're going to use to find those levels, you know, pitchforks, channels, different, time frame horizontals, whatever you want to, whatever you use for your strategy, you find those levels of confluence where there's multiple levels of resistance, and then you mark those levels out. I generally mark them out with boxes. Where my boxes are there, that means there's multiple confluences there. Now, once you have your areas of interest, then that's when you come down. You wait till the money flow, or till the price action gets down to those levels, and say we're coming down to those levels, and we're looking now, once we get to that level of support, we're going to be looking for some bull divs on the chart as confirmation to enter the trade. Because just because it's a level doesn't mean it's going to be respected, just because it's a support level. So we really want to look for confirmation to give us a better hit rate on knowing whether that trade is going to succeed or not. And that's where NAMI and Market Cipher B come in for me. So, yeah, just tools of the trade that I use. And link is in the description if you want that. It also looks like R Pink posted in the chat. Thank you, R Pink, for that. Jaffiel, welcome in, man. It's good to see you here too, and I hope you have a good New Year tonight. You missed the Solana short this morning. Yeah, I did catch it, Jaffiel. I'm in from around 126.9. The Solana was coming up to this level. We marked this level out on the chart yesterday, guys. And knowing that, well, I still think we could come down and hit the value area low of the range down here. We front ran it on Monday. And I do think that we might see that move down to at least hit the value area low. So that'll be my TP1 for the short trade, and I'll cover that in just a second here. But I'm in from it. Got in a little bit late, a little bit later than I wanted to get in on that, but I'm still in it, and I plan to hold it. Plan to hold it until we get down to around 122. Okay, back to Bitcoin here. So, guys, Bitcoin did reject from the 786 and from the value area high of the range, and we've dumped now back down to the POC of the range, and we're just chopping around the POC. Attempting to see a little bit of a bounce here from the POC, and it was also, if we pull our Fibonacci from the lows on Monday to the highs that we saw the other day, it's also around your golden pocket. So if we look at that golden pocket, I guess kind of busting through that golden pocket, where was it then? It was the 86.3K lows. Yes. So if you go from the 86.3K lows to our highs that we saw, we're hitting into that golden pocket. Now, this golden pocket is not as important because it's already been ran through. So the Fibonacci's pulled from this low to this high. That means that on this drop here, we've already ran through that golden pocket a bunch through this drop. So it's not quite as important as pulling a brand new Fibonacci from your next higher low on the chart, which would be, let me get rid of that. Let me get rid of this, which would be these lows here on Monday. And if we do pull those Fibonacci's from those lows on Monday to the highs, you can see we've hit through the golden pocket today. We're actually testing it as resistance right now on some of the lower time frames. Let's zoom in on that 12-minute chart, kind of trying to test it as resistance. We're not really seeing the reaction we want to see here. And I would be looking towards that 786 is the next level just below us that we just front ran. But in my opinion, we are going to continue pushing down. Even if we see a small bounce from the 786, you would want to see a bounce, a reclaim of that POC right away, and then you'd want to start to push up. In my opinion, it's more likely that we are going to continue to drop down and take that liquidity. Take the liquidity from Monday, take the liquidity from 86.3. Okay, let me zoom back out to the hourly chart. We can just look at some of the levels we have locally on the chart. So no naked monthly point of control. We do still have that naked monthly point of control at 91, pretty much 91,500. That is really a key area. Between 91K and 91,500 is going to be a major resistance for me. And I do think that there's a possibility that we could reject from this area, taking all of these highs, these semi-equal highs in here. But because this range is starting to mature here, we do need to watch for, if we come down, bounce from, take the liquidity from 86.3 or come down to 85.7, bounce and start to really bust up through this volume profile, you'd be breaking out of the value area high. We do have to watch for, instead of a liquidity grab into that golden pocket and then continuing the range, we might see a resolution of the range and we might push up a bit higher here. So I'm definitely not going to be setting limit orders between 91 and 91.5, but that is still a resistance area that is very juicy, could give us a fake breakout of this range, and then a continuation of the dump that we've been seeing, or the, range that we've been seeing. Okay, naked monthly point of control there. Naked weeklies, we don't have any in the area. Naked daily points of controls, we only have that naked daily at 92,300. Monthly levels, nothing there. Weekly levels. Now, this is an old weekly, actually. We tapped into this already. So in this area, I'm going to actually take that off the chart. And then our daily levels. We do have a daily level below us. This daily level was confirmed yesterday. You can see yesterday we confirmed a new daily support level at 87,100 or ish, 87,100-ish. And we might see a small bounce from that because it is close to our 786 Fibonacci. Our very local 786 Fibonacci and our daily level. This could be an internal support if we're just going to continue to chop within this range, but I'm not interested in taking any trades from that daily. No trades really from that 786. And that's about it, guys. I mean, nothing really else is in this range. We're just continuing to grind. This is compressing more and more and more. And when we do finally see a resolution of this smaller range, suspect that we're going to break out either to the highs of our bigger range. So we have this smaller range that we've been in for 15, 16 days now. And then we have our bigger range that we've been in for about 6 weeks now. And this bigger range, I don't think anything is going to happen outside of this bigger range until at least Monday, Monday coming up after the new year. And within this smaller range, we might not even see this smaller range resolve until Monday, or at least until the new year, at least until Friday. So just trade the ranges until they break. But when this does, because we are starting to squeeze tighter and tighter and tighter in here, when we do see a resolution, we're likely to see some follow through, whether that's to the upside or to the downside. We're likely to see some follow through here. So be prepared. And I wouldn't be setting limit orders at any of these levels, not at 91.5, 91K, not at 83.5, 83.6. I'm going to be waiting for the reaction from those levels and taking the trade based off the reaction and based off confirmations that we're seeing at that reaction. Okay, Mind Tapestry, welcome in. It's good to see you. Thank you for all your streams and knowledge you've shared this 2025. Thank you so much for that, Mind Tapestry, and blessings to you as well. Yeah, I love these streams. I love doing these streams with you guys. I love hopping on here and just chit-chatting with you guys. Everyone throws out great ideas. And for me, it helps me stay on task as well. It helps me hold myself accountable. If I want to be a good role model for you guys in trading, then I need to make sure that I'm respecting my own rules and being disciplined with it. So in some ways, it's a win-win situation for everyone. Decrypto, Happy New Year to you. And thank you, man. Thank you. I appreciate it. And to me, in some ways, it's not work because I love what I do. I love this. But that's about it for Bitcoin, guys. I mean, small range still, rejecting from the value area high once again today. We're dumped down to around the POC. I will say this. I wanted to see another drive of hidden bear div print, and we haven't quite seen that. Let's see if we saw that on the 2-hour chart. Yeah, no other hidden bear divs here. All right, I'm going to zoom in. Let's zoom in on the lower time frames. Look at what's happening here. Money flow still leaving. Now, we did just get that hidden bear div print. This is actually kind of nice to see right now here. So after bouncing from the POC, we just got a little bit of a rise up, and we're printing a hidden bear div. That hidden bear div is going to be a continuation pattern of the local downtrend that we've been seeing for the day. So I do suspect that we are going to continue pushing lower here. Yeah, no real bull divs on the chart. We are printing hidden bull div on the 5-minute, meaning we could bounce around this POC for a little bit more before dropping, but I do think we're going to drop through it eventually and continue down. Our liquidation heat map here. So this is over the past 48 hours, and you can see really from Monday, those Monday lows, we have liquidity locally below those Monday lows. But if we zoom out and look at some more price action, specifically, I think it was that 2-week chart. Look at all this liquidity that's resting down here below the lows from Monday and really below $86,300. I mean, like I said yesterday, it's just highly unlikely that the market makers are going to chop around this liquidity so closely and not come down and take it out before seeing a real move to the upside. So my opinion, it's highly likely this liquidity is acting as a magnet. It's highly likely that we are going to come down and sweep out this liquidity, kind of reset those longs. And then if we're going to pump, we could pump after taking that liquidity. But until then, I'm going to stick to my short. I'm staying in my short around 89K yesterday. Short here with stop above the high. I was concerned earlier today that I was going to get stopped out here. I was even looking to re-enter. If we did a swing failure pattern of yesterday's high, I was looking to re-enter. But I am looking ultimately to come down to $86,300. Okay, do you trade in prop firm platforms? No, SAD2725, I do not trade in prop firms. I thought about it once or twice, but, there's a lot of kind of rules and stipulations that I don't like with those prop firms. Some of the payout structures are a little bit wonky, and some of them are really shady. So for me, I was like, nah, I'll just stick to my own thing for now. Someday I had a couple prop firms reach out to me for partnerships, and I'm looking into a couple of them right now, doing my due diligence on them. So come 2026, I might partner with one or two prop firms in the future, but we'll see. Okay. Reminds me of the liquidity they left when they went for the 108K to all-time high. Yeah, I mean, let's go back there to from 108K to the all-time high. Are you talking about, okay, this was around 108K. So in this area here, I'm assuming you're talking about this area, in this general area. I mean, yeah, we did see some liquidity get left down there before breaking up to make a new all-time high. That is true. We'll have to see how it plays out, you know. Overall, though, this was a bullish market structure. We were bullish here, making higher highs and higher lows through all of this. Now we had our bigger three-wave corrective move for a bigger correction, and then we started making bullish market structure again. So that was acceptable, even, you know, to continue up. In this overall price action since the all-time high, we've been in a more macro downtrend, and we would be looking at the trend is your friend until the end. And so I would be even, you know, even so we have the bigger downtrend, but even since we rejected from 94.6, I would say this overall is a downtrend. And then we've been kind of going sideways for a couple weeks while the holidays are going. We have to remember that liquidity and volume are the two things that run the market. Those are the two most important aspects, especially liquidity. That is honestly what moves the market, is where the money is at, trading wise, especially in derivatives markets. So for me, coming down to take that liquidity just makes the most sense. Now, does it, you know, I thought it was going to happen on Monday. It didn't happen on Monday. We front ran those lows on Monday, and we saw a little bit of a push up here. You know, now I'm thinking it's going to happen in the next couple days. But do we do something like this, bounce from the value area low and make another push up? It might not happen today or in the next couple of days. We might kind of see another rotation of this volume profile first. But overall, this entire range that we've been seeing, this entire bigger range for the last 6 weeks that we've been seeing from 80.5K, this is definitely more corrective than impulsive price action. And for me, it's likely that not only are we going to come down to 86.3, but eventually it's a higher probability that we're even going to take out the 80.5K lows. And I think that 78 to 77K support level down here is looking pretty juicy. And in terms of accumulation, like if we are done kind of with the bigger dump and we're going to hold off on the bear market for a bit, or just see a bigger correction, you know, like all of this down, bigger correction, and then the, you know, the big dump here. We could be forming some sort of accumulation in here or a redistribution, right? Just like when we're up at the top, we often form these distribution ranges that last, you know, some time before we end up distributing. Formed a distribution range over here, lasted some kind time, ended up distributing. Now we're kind of at the bottom of a pretty aggressive, you know, 36% dump to the downside. So this could be accumulation, and it makes sense as far as the new year goes. We know that a lot of these bigger institutions are going to be rebalancing their portfolios. Maybe they're going to put some more into Bitcoin. So if we are going to see some sort of accumulation happen in this area, we would still expect to come down to make a tap two. This is your tap one of an accumulation. Your tap two is always lower than your tap one in this case. And then whether that's going to be a model two where you make a higher low and kind of make that inverse head and shoulders, you know, bottom reversal pattern, or even if it's going to be a model one accumulation where you make another low, tap one, tap two, tap three, before seeing that expansion upwards, I would still expect that we are going to see another low being put in below 80.5K on the higher time frames. See, let's zoom out to the daily. Let's look at our money flow on the daily and see how it looks here. Yeah, you can see here, first of all, NAMI is quicker than Market Cipher B. So NAMI has confirmed the red dot on the daily time frame, but look at the money flow here. Let me just pull this up full screen. Look at this money flow has already started to curve to the downside, and we did get the red dot confirmed momentum wave starting to curve to the downside here. And with that red dot, that might give us that little bit of a dump that we need to come down to take that liquidity. Now, as far as market cipher B goes, you can see market cipher B has been rising on liquidity or on the money flow, but it looks like it's wanting to start to roll over here. And if we close today's daily candle red, this might start to really roll over here and start to come out again. I also don't like how at the bottom at this 80.5K low, we did not see any bull divs. We didn't see the bull divs that we want to see here. If 80.5K was going to be a more macro low and we were going to chop here and then push way up, you would want to see some sort of bull divs on high time frames here. No bull divs on the chart. Money flow was leaving aggressively. Money flow was leaving aggressively. No bull divs here. Now that our money flow has started to kind of curve up overall in the last 6 weeks from that low, if we do see a quick flush down, maybe in less than a week or so, we could see those bull divs now come in here and the money flow would overall be curving up. That would give us the potential for a nice little, at least a day trade to swing trade long from 78K. We might be able to push all the way back up to retest, 90K or 96K, where our POC of our macro range is. Okay. Full port, thank you, man. I appreciate that. I just do my thing, and I do hope you guys do like the video, do subscribe to the channel. I literally hold nothing back from you guys. I don't hold anything behind a paywall. I do have a private group, a Telegram group, but really all that you need to access that Telegram group, and if you guys are interested in this, I'll kind of go into this a little bit right now, but BYDFI is one of the main partners of the channel, and they're a great exchange. They really have some great trading fees, very responsive team as far as customer service goes. So I've partnered with BYDFI, and we have created a Telegram community where they post some of their kind of bot trading setups, and I also post my thoughts on the market, some trade setups for you guys. Like earlier today, I let you know that I was taking that short, or I let you know that we were at resistance on Solana on that little, let me zoom in here onto the hourly chart, at that golden pocket value area high, and we did have some bear divs on the chart. Now, I didn't specifically say that, hey, guys, I'm entering short right now, but I don't like to tell you guys what to do. Now, so that's kind of a hint. When I pop in the Telegram and say, guys, we're at resistance here, we have bear divs, I might not say I'm entering short, but when I say that, I'm kind of giving you guys that we're at resistance with confirmation. So you can take, make your own whatever from that, make your own comments from that, make your own analysis from that. But that's that's what so the Telegram community, if you guys want to get into the Telegram community, all you have to do is sign up with BYDFI using my affiliate link. Looks like RPink just posted that in the chat. Thank you for that, RPink. And once you've signed up with BYDFI, you do have to deposit $100 into the exchange. That $100 is your money to trade with, though, guys. You're just depositing onto the exchange. First of all, you'll get 20% discounts on trading fees, and you can actually earn more discounts on trading fees if you deposit some of the larger amounts. But they also are giving you some really good initial deposit bonuses. So a 50% deposit bonus on $100 is the best deposit bonus I've seen on any platform. And then once you've signed up with BYDFI using my affiliate link and deposited $100, then you can go into the Telegram, which RPink just posted in the chat as well. Thank you for that, RPink. Or it's in the description of this video if you're listening to this afterwards. And once you're in that Telegram, you just type in /verify and your user ID, which will be right up here. And it's probably going to be a string of letters and numbers for you. But once you've done that, you can get access to the Telegram community. And then once you're in, you're in. That $100 is your money to trade with. You're not giving it to me. You're not paying $100. That's just you're just depositing it onto the exchange. So that's it, guys. Yeah, that's it for that. Abir, welcome in. It's good to see you, man. Happy New Year to you, and God bless you as well. I hope you're having a good year. Okay, the last all-time high. The last all-time high. All right, let's zoom back out to the daily. So you're saying when we didn't take liquidity from 108K from the last all-time high, so here we dropped to 107 here. Hmm. Not sure where you're looking at with that. Well, what I would say is, regardless, it's likely that we are going to continue down as far as local analysis goes, because this move that we saw from Monday was a three-wave corrective move. Let me zoom in onto the 1 hour so you can see that. Because if we were looking for new highs, we would want to see a 1, 2, 3, a 4, and then we wanted to make a new high here. Like, or this push up that we saw last night, we would see this is a 1, this is a 2, this is a 3, this is a 4, and this push up, you would have wanted to at least break above that high from yesterday. That would have given you a 5-wave structure, and then you could be looking for a move back down to your local golden pocket for a wave 2 before breaking up in a wave 3, 4, 5, to see a bigger impulse in progress. But this was pretty much confirmed to be a 3-wave move after we broke local market structure bearishly, made a lower high, and now we're making a lower low here. So it's likely that this move down could turn into an impulsive move down, even if it's a local intraday impulse to the downside. It could, like I said at the beginning of the stream, also be a corrective move. We could be seeing a larger W, X, and then a Y corrective move, just continuing this complex correction that we've been seeing for the last 2 weeks, and really specifically for the last 6 weeks. We've been in a larger complex correction. It's been boring, guys. It's been boring. It's been a nightmare as far as Elliott wave analysis goes. It's been a nightmare to try diagnose all these little pumps and dumps. But I will say this too. Every time Bitcoin pumps, we generally have been seeing a dump right afterwards. Pump, dump right afterwards. A little bit of a pump, dump right afterwards. And the overall bias is still bearish. Okay, let's see. Oh, Travi Trades, welcome in, man. It's good to see you. Happy New Year to you as well. Yeah, and I do hope all of you guys have a prosperous 2026 as well. One of the things that trading can do is it can help you become more self-sufficient and, even break into wealth if you know how to play it right, if you're patient. So it does take time. Trading is not a get-rich-quick scheme. It does take time to build a portfolio, but let's say this is your portfolio, whether you're starting with $1,000, 10,000, or even $100. Let's just say $100. At first, it feels like you're doing a lot of work and your profits are going to be real small, and you're going to feel like you're wasting a lot of time and energy for almost no profits. But as you start to build that portfolio and compound that portfolio back into or compound those profits back into your portfolio, 1%, of $100, 1%, and then of $200, and then the bigger your portfolio gets, 1% of that bigger number really does start to add up. And there's a certain point within your trading journey where you really start to kind of break into a new level where it's like, 1% a day or 1% per trade. If I'm winning, that much, that's actually sustainable to help out my life financially, like truly help out my life. So at time, this could take you a year or 2 years, depending on how low you're starting with, to really, you might be grinding and working very, very hard for very little for a while. But if you can stick with your discipline and stick with proper risk management, and of course, it's not going to you're going to have losses in there. It's not going to be straight up always, but the overall, if you're compound interest, like Einstein said, was the eighth wonder of the world, you keep compounding those profits back into your portfolio, and you get a 1% of those compounded profits. Over time, you will start to build something nice for you. So I would say keep with it. If you guys are struggling, keep with it. Make sure you set your rules and discipline, and you have to have the discipline to stick to it. Another thing that I see a lot of traders do, especially in times like this, when we have kind of slow sideways ranging price action and people start to get bored, they almost see this as a form of addiction or like a dopamine high where they have to be in trades. So they start taking unnecessary trades just because they're bored and they feel like they need to trade something. If Bitcoin is going sideways, look at different assets that you can trade, or just be patient and sit on your hands and wait. You might only get 1 or 2 trades a week. I think this week and last week, it was really boring and I only had a couple trades, but sometimes that's what the market's going to give you. And you have to let it play out the way it's going to play out, not ruin your discipline or get into bad trades with bad risk management just because you're bored. That's part of the psychology of trading, which is also a big, big part of all of this. Okay. Draw your own conclusion from what from Divine's market opinions. None of this is financial advice. Yes, yeah, guys, none of this is financial advice. Really, what I'm doing coming on here is I'm just showing you guys the technical analysis that I have looked at for myself and giving you my opinion on what Bitcoin is going to do or what, what's likely to happen, the probabilities of what's likely to happen. But none of this is financial advice. And, I'm just showing you guys TA, really. Top 2026 to all. Yeah, Samuel S., welcome in, man. Good to see you and happy new year to you as well. Thank you for being here and thank you for modding. What are the other tools, indicators you use other than NAMI and Market Cipher B? And by the way, I really appreciate the work you put in. Well, thank you for that, Sad 2725. And Darren does things. What's up, man? It's good to see you in here as well. Actually, guys, Darren does have some really, really good indicators as well. You might have to, maybe Darren can post, if he has a page or a website, he can post that in the chat. What other tools do I use? So the tools I love, volume profiles. These are called fixed range volume profiles. And like I say often on this channel, the two most important things to look at in the markets are liquidity and volume levels. So liquidity is like these swing highs and swing lows, certain levels, swing highs and swing lows where traders, like for instance, if we got into this trade yesterday, I did get into this trade yesterday, shorted around 89K. And my theory was that we were going to make a lower high and then we were going to come down to take out our 86.3K lows. So that was my trade setup. And my stop is going to go above that local high because if we start to break up to new highs, then obviously I could be wrong. I need to get out of that trade. So there's stop losses, technical stop losses that are going to be above those highs. And this is liquidity that's resting above these highs. So oftentimes the market makers will hunt liquidity of retail traders. So that's liquidity is one of the most important things in the market. Secondly is volume levels, where the volume is coming in these price action, in the levels of price action, you are going to see reactions at levels where people have been interested in. A lot of whales like to defend their positions. So if we're coming down to like a volume level of support, they will try to defend that position. So volume and liquidity, and you can get volume levels from your fixed range volume profile. I also use an indicator called the periodic volume profile. That's this indicator here, PVP, or it's called periodic volume profile. You can get naked daily, naked weekly, naked monthly points of controls, and those are very, very good levels to be looking at. Pitchforks and channels are my bread and butter. I use pitchforks and channels. They're really just trend tools. Like the trend is your friend until the end. So if we're looking at trends, it can give you those key levels within a trend to look for shorts or longs. And then time frame horizontals, daily levels, weekly levels, monthly levels. Those are what I use. The indicators that I use down below are mainly for confirmations. And there are a couple other indicators. I do like the stochastic RSI. I do look at the stochastic RSI sometimes. But yeah, that's about what I use. I have started with 100 and now currently it's 190, almost 2x. Yeah, that's awesome, man. Sad 2725. You should be really proud of that. Here's the thing. If you can turn $100 into $200, then eventually you'll be able to turn $1,000 into $2,000 or $10,000 into $20,000 or 100,000 into 200,000. So that's good that you're consistently growing that portfolio. That's what you want to see. And honestly, I recommend you start with a lower amount of money until you get consistently profitable for, a few months, 3 to 6 months. And then you can start to ramp it up a little bit if you want, or just continue to build that portfolio, which will grow in time. It will compound in time. Darren, you've been scalping the ES on an instant funded almost at my second payout target. Awesome, man. That's interesting. So, Darren, what prop firm are you using for the ES to trade that payout? And do you like the payout structure with that prop firm? Been scalping ES since October, already taken 750 payout. Nice, dude. That's really awesome. Let's see. That was my exact strategy to get in today's short. I got in at 88,960. Nice, dude. I'm in pretty much from right there as well. 89K. And I am looking to come down. to sweep at least Monday's lows at 86.6, but we would be so close to this liquidity at that point. I would be looking to kind of sweep it all in one go. And I think it's likely we're going to. The ES is the S&P 500. SAD 2723 25. And absolutely, man, keep it up. Keep it up. Just don't get too cocky because the market will always humble you. So I know one of my teachers from a few years ago, he actually has a YouTube channel. His name's Bitcoin Hyper. He was one of my teachers when I first started trading back in 2019. And he told me a story. You know, he won 47 trades in a row, really built up his portfolio very, very nicely. But he was still kind of newer on risk management. He started getting cocky and risking too much. And he won 47 trades in a row. He risked everything he had on a trade and it went against him and it wiped out his entire portfolio. So that's where risk management really, really does come into play, guys. You don't want to be risking more than 1% to 2% of your portfolio per trade. You know, swing trades, sometimes you can ladder in up to 3% but if you're risking more than 3% of your portfolio per trade, a couple mistakes can really set you back harshly. So work on that risk management. And remember, your position size is always going to be based off your stop loss percentage. You know, let me just give a good example. Let's say we're going to come down to 86.3 and we're going to see a swing failure pattern of 86.3. So we're coming down, we pierce through the level, we wick back above it, and we start to flip it to support, you know, get back inside our volume profile. And we're now looking to come up to 91K. This is just an example I'm using. I'm not saying this is going to happen. But let's say that this is, and we enter on that swing failure pattern. So we wait for it to pierce the level. As soon as you start to get back above that level, you can enter that long trade, putting your stop below wherever that wick was going to go. And you can give it, of course, a little bit of breathing room underneath it. But now you have a stop loss of 0.35%, 0.36, let's just say. So whatever 1% of your portfolio is, let me grab my calculator. Let's just say we have a $1,000 portfolio. Okay. So 1% of $1,000 is $10. So you're going to be risking $10 per trade. So if you have $10 you're risking per trade, that's 1%. You're going to now divide that $10 by this number. But because this is a percentage, you got to move the decimal over 2 places. So we'd be 0.00357. You can put on, let's see. Yeah, you could put on $2,800. That would be your position size that you would use. And if you get stopped out, you're only going to lose $10. Now, here's where leverage comes into play because you only have a $1,000 account, right? So you're saying, wait, I don't have $2,800 to put on my trade on the position size. That's where you can crank up the leverage to 2x or 3x. Let's just say you crank it up to 3x. You're borrowing $2,000 from the exchange and $1,000 of it's your own money, but your portfolio size is $3,000. So now you can put on $2,800 onto that position. You'll still have $200 left. It's just you're using some margin from the exchange. But that's risk management, guys. It's one of the most important pillars in trading, and you should really learn to be good with risk management if you want to be a long-term trader. Okay. ES is stuck. Yeah, okay. Top 1 futures, Ignite instant funded. Okay, 25K account needed to make 1250 without losing $1,000 to take. Okay, nice. Darren does things. That's nice. There's a couple different prop firms reaching out to me. That's why I was just asking about which one it was. Can we check ADA? Yeah, we'll check ADA here. We're going to check some of the altcoins right now. Guys, Bitcoin is starting to lose that POC of the range. Once again, brief synopsis. I think we're coming down to grab the liquidity. Thanks again, man. Would it be smarter for a spot bag to exit right now and re-enter around 86.3 or even the 80K level? Well, Caesar, here's the thing. Within this larger range that we've been in for 6 weeks, since from 80.5K to 94.6K, this is our larger range that we're trading now. And then we have our smaller range that we've been in for about 16 days or so. Overall, it's likely that we do come down to take out these lows based off the larger bearish market structure, and impulsive price action to the downside. It's likely that we do, highly likely. But within this corrective move that we've been seeing from 80.5K, we're in process of a complex correction within all of this price action here. Now, we could still make a higher low here and come up and make new highs, taking out these highs and even retest like 96 to 98K before dropping again. So I can't tell you what to do on the spot bag, but knowing that our overall macro bias is to come below 80.5K, I would probably wait. If I had a spot bag and I was looking to get out, I would wait till we came up to like a bigger resistance, 91.5. Say you do reject again from 91 to 91.5. That could be an area to pull out that spot that spot bag, and then maybe buy it once you come down to 78K, or even as soon as you break those 80.5K lows. But like just selling it right now, we're in a smaller consolidation range that's about, it's relatively soon. We're going to see a resolution of this range. It might not be till next Monday, but I can't tell you what to do there. I could just tell you what I would be looking at is taking profit at key resistances and looking to buy back at key support levels, and knowing that the overall bias is bearish. I would be, that would be a possibility for me. And it would also depend on what size that spot portfolio is, because let's just say like it's $1,000 worth of Bitcoin, and you're going to sell it at 91K and then come buy it back at like 83.5. Say we're going to bounce from here, and then we're going to continue up, seeing this overall corrective range continue. That might not be worth it with the fees that are required on spot, especially if you're buying on Coinbase or some of these other exchanges. So, can't tell you what to do there, but it's a good thought process, honestly. AXSCB, welcome in, man, and thank you, and I hope you have a good New Year's as well. You got in the soul short. Me too, man. I'm in that soul short from 126.9. Let's go into Solana really quickly, and then I'll go into ADA. But on Solana, guys, yesterday during the live stream, we marked out this kind of key scalp levels, the scalp resistance in this area, golden pocket, value area high. We also had some liquidity that was a little bit below that, but coming up into this area, we were looking for a short from this area. Was there a naked daily point of control there? Let's see. I think there was let me just turn that on. No naked dailies. But golden pocket, value area high within our smaller range. So if we were coming up to this area with some bear divs on lower time frames, because remember, we're looking for bear divs within this rising price action here. So you have to zoom into the lower time frames. 15-minute, we were seeing the bear divs. Money flow was starting to top out here, and we made one more high, actually hitting that resistance. That's why it's important to actually wait till you hit resistance. So bear divs, and then money flow was draining out, and Nami was showing some bear divs as well. So I ended up taking the short at about 126.9 for me. I got in a little bit late. And on this area, if we're just going to trade this range, let's just say we're going to trade this smaller volume profile in this range until next Monday. We did have a naked weekly point of control at 122 that was front run on Monday, and it was also our value area low that was front run. If we pull a golden pocket from the lows on Christmas to the highs that we made, and we look at our golden pocket, our range lows of this small range to those highs that we made a couple days after Christmas, you can see this golden pocket. It's a fresh golden pocket that hasn't been tested. And so we have a golden pocket there, and we have our naked weekly point of control and our value area low. So my TP1 for this short rate here will be right around 122. Let's say we do bounce and continue to range within this range. We could even push all the way back up to the POC, reject there, and then really see the bigger dump. But TP1 will be around 122. We could also potentially look for a scalp long opportunity from this area. So we would be short from the highs of the range, long from the lows of the range, let one of them get stopped out. You, after a TP1, you'd want to move your stop loss to break even. Let one of them get stopped out. Let one of them ride. You're hedged against yourself. You win either way. But yeah, that's going to be what I'm looking for on Solana now with that 122 level. If we look at our naked weekly points of controls, you can see here that we do have that fresh naked weekly point of control from last week that has not been hit at 122. Golden pocket value area lows there. Just makes sense that that would be a level of support to bounce from. And because we did reject the value area high of the range, we've lost our point of control now. So the highest likelihood, because we've rejected the value area high and lost our point of control, is to grind down to the value area low. We have to remember what these fixed range volume profiles are. First off, the fixed range volume profile is measuring important high volume nodes within a certain time frame. So for me, I'm looking at this sideways range that kind of started on December 15th. So, you know, half a month now or so, we've been sideways on Solana. So if we're looking at the important volume levels within this range, the value area high is where it's considered, where the asset is considered overvalued. The point of control is considered the fair value for the asset. That's where the highest amount of volume has been traded within this range, and it's considered fair value. The value area low is considered undervalued. So if you're scalp trading this range, when you come up to the value area high, it's considered overvalued. If you see confirmations to enter the short, such as bear divs and other resistances like golden pockets, which is a key psychological level, you can enter short where it's overvalued. And then once it gets down to it's undervalued, you can take profit on that and even look to hedge a long position where it's undervalued. And you're just playing the range and play the range until it breaks. The most important levels within the range are the high volume nodes and liquidity levels, you know, liquidity level here. Another thing about this take profit one at 122, we have Monday's lows resting down there. So we have the swing failure pattern of Monday's lows right into a naked weekly point of control, right into our value area low, and right into our golden pocket. So for me, it just makes sense that we might see a small bounce from this area, and it's definitely a good take profit one. Now, from this area, if we enter long, we can now pull a trend-based or we can pull a Fibonacci retracement going from the highs from today to wherever that low is going to be, and you might just come up to your golden pocket, reject that, and continue the bearish price action, right? So you could, whatever profit you took down here for your TP1, you could compound it back. If you're starting to reject from your golden pocket, you can re-add it back in here. Scalp trading does require a little bit of babysitting. You kind of have to sit at the charts and babysit the charts, or at least set a lot of alerts and be ready to look at confirmations once those alerts go off. And for me, especially towards the end of the year and Christmas and all that, when family's over and things like that, I don't like to scalp trade as much. But the market right now is in scalp trading mode. We are not seeing big moves in crypto anyways. So we kind of have to trade what the market is giving us. And here's the thing on this, guys. A lot of people think that this little move here, say we got in at 126.9 or 127, and we're looking to take profit at 122. This small move here can be more profitable than a giant move. Like, let's say you got in, I'm trying to give, this move here is much bigger, right? This move right here is much bigger than that small move. But it's about your stop loss and your risk management. So let's say that we bounced, we made a higher low, you entered long right here. Your stop is going to go below the low, right? The lows, or you could even put it below this low. But you're targeting, let's say even you were targeting taking out these highs here. That's a 3-to-1 risk reward ratio just to target these highs, which we didn't even hit. That's a pretty big move here. But depending on how sniper of an entry you got down over here, let's say you got in at 126.9 like I did. So let's do 126.9-ish. You're going to put your stop above the local high, and you're going to be targeting 122. That is a 8.5 risk to reward ratio. So you would actually make far more money on this smaller move than the bigger move because your risk reward ratio is better. So you can still make good money in scalp positions on smaller moves in the market. It's all about your entry and your stop loss. You know, how tight that stop loss can be. If the tighter you can get your stop loss, the more money you can make off a small move. Okay, let's. I'm good with risk and my trade strategy with good risk reward ratio. The issue is I always struggle with good mindset when trading. Yeah, mindset's a big part of it, man. If I lose when I trade, I lose 2 trades in FOMO. How to fix? Sad 2725. That's tough, and I've actually struggled with that too because we lose a couple trades and then we get into this kind of panic mindset of like I need to make this money back or I need to get a win and I need to. You have to catch yourself thinking that. If you're thinking that, literally get up and get away from your computer. Go do something. You know, go eat something. Go get your mind off it. Let those chemicals in your brain and your body reset and calm down a little bit, and then come back and rebalance. Come back and reanalyze the charts. But if you're having a problem entering trade after you lose a couple trades, you want to FOMO in just because you've lost. Walk away. Literally, get up and walk away. Even if and your mind's gonna be freaking out. Gosh, you're gonna miss out on a trade. You're gonna miss. First of all, you're never ever gonna catch every trade in the market. You shouldn't even try to catch every trade in the market. There will always be another trade coming, no matter what. So it's okay to get up and walk away and to reset. That's what I would say with that. It's what I've done to help me. Go take a walk, go get something to eat, go, even if you need to lay down for a bit, take a nap or something like that. Specifically talk about the mindset while trading. I also do meditation. Yeah, meditation is great, dude. Actually, meditation is super great to help with that. So I'd say that's a really good practice that you have already. TradFi will only be repositioned mid-January. Yeah, Darren does things. I agree, man, because a lot of the big TradFi is off. They've been off since a couple days before Christmas, and they're not going to come back. Even that first week of January, a lot of them aren't back yet. And yeah, I agree. It's going to be slow. We will see repositioning of major portfolios coming mid-January, and that's when we can really start to see a kick to the new year. And guys, by the way, this new year, I do want to hit this new year off and hit it off quickly and hit it off running and really start to go over more live trades during the live streams. I said that yesterday. Now, we're not going to force trades just because we're live. We're not going to get into bad trades just because we're live, but I really want to focus on entering trades if we get the opportunity while we're live and kind of walk you guys through that process. Right on, brother. I've done quite well on equities and options for 10 plus years. Wow, that's awesome. And this is my second crypto cycle, 6 figures worth. But this cycle has been insane. Yeah, Caesar, this cycle has been insane for sure. But it sounds like you know what you're doing. If you're 10 plus years deep here, you're doing something right to not, 90% of traders go bankrupt or they lose it all. But yeah. Okay, sorry, let's go into ADA real quick. ADA D. Okay, what was that? Are people selling their ADA for midnight? I'm not sure about that. Celine Anderson. I don't know what midnight is. Not too familiar with all these smaller, newer coins that are launching. I generally trade the bigger coins like Bitcoin, Solana, the coins with real liquidity. But it looks like midnight. Not midnight. ADA is dumping here, and yeah, it's losing its range. We are at major support here. And we had our bigger green box, but within the bigger green box, we had this smaller green box, but we already bounced from it. So in some ways, this support level was already hit. Nice little 1, 2, 3, 4, 5. We saw a nice little 5-wave impulse to grab liquidity of these highs. But after grabbing the liquidity, we rejected and we're making new lows now. So let me pull this volume profile. This volume profile, by the way, is a much larger macro volume profile. Where is that at? There it is. Okay, let me zoom out on this and we'll discuss this. So overall on ADA, I am looking for lower prices. From these highs up around $1. You can see we have this kind of sideways channel here, this descending channel. And to me, all of this is an impulse to the downside that's not complete. So we have our our 1 2 1 2 in here, and then we start to see volume coming in a big drop here. Well, this all here was a third wave. Then we got a fourth wave corrective move, and now we're in the fifth wave here. But because you got 2 1 2s up here, you're going to be looking for 2 4 5s, kind of that contracting diagonal or channel to end it. And that would end your bigger overall daily impulse to the downside. So as far as the daily time frame goes, the bias is to come lower and make new lows. Now, we are at some pretty key support. You can see this volume profile goes back to January of 2022 or December of 2022 or January of 2023. So this is pretty much your whole bull market, this big volume profile for your bull market. We're at the point of control of the range, but we're dropping below it. And actually what happened earlier, so now knowing that your macro POC is here at 38 cents, look at what happened over the past week or so. We came to our major support level being a monthly and our macro 786 Fibonacci down here. We hit the monthly at 34 cents. We bounced from the monthly. We came back up and rejected from your macro range point of control. It was a bearish backtest. Let me get rid of this bigger one here. So, and let me hide this for a second. So overall on macro timeframes, when you start to lose your POC, this is your fair value, your big level of support. Then when you lose it, it often gets flipped to resistance. But this level right here, which I don't know why it's showing 36 right now, it's 38 on every other time frame. Let's see if we can zoom out. There we go. So you can see we came down to it, support. We bounced from it, but this move right here was the most important move that we saw. And look we rejected right from our resistance that we wanted to reject from. That move was a 3-wave corrective move. If we were going to really push up from there, we wanted to see a 5-wave impulse. Impulsive structures are 5 waves. Corrective moves tend to be 3-wave corrective moves. You know, now within this 3-wave correction, it gets more complex because you can have an impulse within here and an impulse within here. But that 3-wave corrective move after bouncing from the POC, which was major support, you had a 3-wave corrective move, rejected from resistance, and then we started to push down aggressively. We broke below those lows. So that was key to let you know that's our first lower low there. Now, after breaking down below the POC and starting to close daily candles below it, this is the 12-hour time frame, but we were closing daily candles below it in this area. That is confirmation that you might be losing the POC. Instead of it acting as support, now it's going to be flipping to resistance. So we come up after we bounced from the beginning of our green box, bearishly backtested it, rejected. Bearishly backtested it, rejected. Now we came down to hit our monthly level. After hitting your monthly level, you expect at least some sort of reaction from that monthly level. And if I zoom in here now onto the hourly time frame, after hitting your monthly level, we saw a intraday or a lower time frame impulse, right? 1, 2, 3, 4, 5. You came up, you took the liquidity on one of the bearish backtests. You can see that was the liquidity here. Remember, liquidity is one of the most important things, and especially if you have a liquidity grab into a confluence of resistance. There was our POC here. All this push up was a bearish backtest of the POC after losing it. This was a bearish backtest. This was a bearish backtest of the POC after losing it. So we lost the POC. We started closing daily candles and forming a range below the POC. We made new lows after rejecting on that bearish backtest. Now, after hitting a support level below us, we're going to make another attempt at the POC, another bearish backtest. We came up for the bearish backtest. We grabbed liquidity. We rejected. So on that rejection, you would expect to come take out this low. And we are now. On the bearish backtest, if you reject here, you expect to take out this low. We did reject. So we would expect us to come down to take out that low. We are taking it out today, finally now. And this could continue pretty aggressively here to push down. I want to check out our volume. Yeah, volume increasing on this push to the downside. Look at this volume increase on this push to the downside here. So when you see volume increasing on a dump, it's less likely that this is going to be the low if volume is increasing, because usually what happens is you'll get your initial dump. You know, you can grind sideways or see a small retrace. You get a bigger dump in a wave 3, and volume usually increases in a wave 3. Then you'll get a small push up. It's like a dead cat bounce push up, or, a lower high corrective move. And then you get one more low, but that low is on decreasing volume. And that's when the move is to the downside is starting to weaken. And that'll also give you those bullish divergences. So because our volume is still increasing on this dump right now, it's likely that this dump is going to continue, because we're also we're starting to lose our box of support. I want to zoom out here. I think I talked about, if we lose this 33 to 34 cent area, it's not looking good. The 33 and a half cent area is your macro logarithmic 786. So if we look at this, it's from your bear market lows down here at 23 and a half cents or 23 cents, all the way up to the cycle highs. That is your macro logarithmic 786. Let me get rid of that. You're starting to lose that 786. We haven't closed a daily candle below it. And even, like, I would say you could even bounce around here for a couple days. So, and we do have some nice bull divs on the chart. You can see lower lows through all of this, higher lows here, and your money flow is starting to bottom out. Actually, it is on the 2-day time frame. It's still coming out here locally. But NAMI, which is quicker than Market Cipher B, look at the bull divs that you're seeing, and money flow is curving to the upside here. So we could be getting close to a bottom, or at least close to a bigger, like, little relief rally here. But I would now look at some liquidity levels below us. We have liquidity here at 31.7, and at 32 cents, you have some liquidity. It's likely that these are so close to each other, it's likely they get taken out together. And that liquidity is important, because look at these big volume imbalance candles, these big bullish imbalance candles that started. So I know this is a long ways away. This was all the way back in October of 2024. But bigger players that longed within this range here, their stops are going to go below those lows. And yes, a lot of them probably took profit, when they came up much higher here. But there will still be technical liquidity that's resting below this level at 31.73. So if we start to close daily candles below 33.47, it's likely that we continue to grind down, at least until we hit that liquidity and come take out that liquidity. What I would say is that this move down from $1 has been super bearish, and it started out with a couple 1-2s. We have our big third wave. By the way, we could still be in the third wave. And then you're going to start to see a bigger dead cat bounce or a corrective move. And you want it to take about the same amount of time as these smaller, like these wave 2s in here. So this took 6 days, or 12 days, excuse me. And this one was probably about 10 days. So for a couple weeks, we might see a small corrective bounce. And then you're going to have another local impulse down. And then you're going to see another corrective bounce, and then another local impulse down. But you'll often see it starts to bottom out, and you get what's selling exhaustion. So you're starting to find a floor. You're starting to go more sideways here. And this could also be what is considered a bottom reversal pattern, like an accumulation pattern, like a left shoulder here, right shoulder here, head there, right shoulder there, like that inverse head and shoulders, or a Model 2 accumulation. So I would say that overall on ADA, I still expect lower targets, but it is now, we want to wait for ADA to start getting more like a bottoming range forming in here, some sort of accumulation range in here. So until that happens, you still have to say that trend is your friend until the end. And the trend, unfortunately, is very bearish right now. Very bearish, and expected to kind of continue to the downside. More locally, let's zoom in onto the 2-hour chart. What I would be looking at, we had the POC that was holding as support, and then we broke it down, and now it's flipped into resistance. So we can look at all the price action underneath your POC. All of this price action could be considered a range that's forming underneath the POC. So now we can take our fixed range volume profile, pull it from when you lost the POC over, and we could play this volume profile. We'll look at what was happening on this volume profile throughout the day. We came up, we grabbed liquidity, we came down to the value area low, and we chopped sideways around the value area low in POC. But when we couldn't reclaim that POC, now we start to dump, and we're losing the volume profile, the value area low with volume to the downside. That is a bad sign that you're losing it with an increase in volume to the downside. That means we're truly breaking and losing this range. The market is no longer considering undervalued price for ADA at 34.87. It's saying, nope, we want lower prices. So now we're dumping, and I would suspect we're going to dump to come down to take out that liquidity at 31.73. It might keep going. It might not see a liquidity grab. It might keep going, but I would say that's the next major level to watch. We can also look at some order blocks, like you could pull it over to where that price action is. Man, this is going to take forever on the... Okay, and you do have an order block in here. This is a 2-hour order block. We can mark that out. Let's just do the highs of that candle, and I'm just going to make it this purple line. Where's that? And then we'll throw it in at the lows of the body of that candle. So this red candle here, and now we can look at that order block here. We might see some sort of bounce from this order block from, 32 cents, 32 to 32.7. That order block might give us some sort of reaction, but knowing that this order block is so close to this liquidity, I would think we're going to come eventually take that liquidity. Also, the monthly level now, we have to look for this monthly level now being flipped to resistance. Big bearish engulfing candle on the daily. It's not good here. I don't know what's happening technically with ADA, like if people are selling ADA to get into midnight. I don't know what midnight is, but just be aware that this doesn't look very good here. Yeah, money flow looks pretty bearish here. We are getting a green dot on the hourly, but no bull divs here. Very slight bull divs on NAMI. Yeah, I would just say it looks like we're going to come down. You finally hit the 786 Fibonacci. That's at 33.5-ish. You can see this, zoom out to the daily. At 33.47 is that logarithmic 786. If you close your daily candle below this, that's bad. But if we can, like we have a couple hours left before the market closes, if we can come up here and end up closing at or around that 786, then you might be able to see it hold and over the next week make a little bit of a push up here. But you want to close your candle at or above 33.5. If you close it below 33.5, you're probably expected to continue down even locally. Okay, right on. Where am I at in this chat? Yeah, Ada's dying though, man. Wow. Happy New Year to you, Vinesh 1356. Welcome in. Quiles 1100. What's up, man? Good to see you in here, and Happy New Year to you as well. Can you see inverted cup and handle formation in Bitcoin in this 6 weeks range? Let's see here. Inverse cup and handle. Oh, I see what you're seeing here. You're looking at this is like the cup, and this is the handle. I mean, it could be a cup and handle, but then you're going to look to break this, down. Let's just throw on. We'll just go from this high here, and we'll throw it to about where these candles end here. And let's take this and let's put this the breakdown. Yeah, I mean, you would break down. I would want to break down a little bit lower to probably this 78.3 to 77.3 level. But I see what you mean there. It absolutely could be like an inverse head cup and handle. Okay, sometimes my stop loss is my enemy. I was long on Sol from 119, then got stopped out, then Sol runs up. Yeah, AXSCB, I feel you there. I've had that happen to me countless times as well. The thing is, if you keep getting stopped out on your stop losses and then the asset makes the move you were expecting anyways, start to adjust your stop losses. There's also an indicator in here called the average true range, ATR indicator, average true range, and that'll give you the average candles. So the average range of the candles, like right now we're about $1. So the average, and you can put your stop loss below that. Like, so say you longed 119 in here, 119.2, and or like here, and then you put your stop loss and you got stopped out on that wick there. This your stop loss here is only 26 cents, right? But the average candle is about 97 cents now. So you can adjust this to make it over 97 cents. You can adjust it to make it like $1 stop loss. And that's what you can use the ATR for. Okay, I'm a breakout prop trader. I really love it. Awesome, man. Well, if prop firm trading works for you, that's a great way to leverage money, in some way. So good for you, man. Really awesome. So Solana, guys, Solana lost the point of control. We came back up to back test that point of control and rejected. So now I do expect the move to value area low. Look at what happened here. First of all, I called this short out yesterday, or this resistance out yesterday, and I told you guys I was shorting it this morning in the Telegram. But we lost the point of control. We came back up to back test it bearishly. We rejected there. Because we rejected that point of control, now you expect to work your way down to value area low. You think we might retrace back up to get in if we missed it? Honestly, Jaffiel, this just happened, but that was kind of the retrace right there. That candle to backtest the POC. Now I would say you're closer to your support level than that resistance. So I would be now looking to enter along at 122 if you have some confirmation. So if we keep dropping here and come down to 122 and see some local bull divs, you might be able to look for a scalp long from 122. I'm going to be looking at my take profit one is going to be at 122, and I might look for a scalp long from there as well, depending on how price action looks once it gets down there. Actually, what we should do right now is set an alert on this naked weekly point of control. Just because I'm setting alert doesn't mean I'm going to long it if it touches it, guys. How come MES MicroStrategy didn't hold support while Bitcoin has? Do you think BTC might not get that relief bounce and just go? Yeah, well, here's the thing with MicroStrategy. We know that one of the major index funds might be delisting it come January 15th. They're going to make the decision on that. So a lot of people are uncertain on MicroStrategy's future. And remember, the market hates uncertainty more than knowingly bearish information because they don't know what's going to happen. So if they're uncertain about something, they'll get rid of it. They'll sell it out of their portfolios. So I could see why MicroStrategy is dumping even though Bitcoin's not. It didn't hold its bigger support level. Let's see here, daily time frame. Let me get rid of this. Man, this thing is just tanked, huh? And I would even say we're in an impulse to the downside. You could look at this as a wave one, a wave two. We're in a big wave 3, 4, 5 maybe. We're probably going to see something like that. But MicroStrategy, some of this TA is old now. We can get rid of this. I mean, we've lost this upper range. We were in an upper range up here. Clearly lost that range, and we're continuing down here. But we're starting to come into this range now. So what we can look at is pulling the important volume profile, pull a volume profile of this prior range. And oftentimes, okay, we're even below the value area high of that range. We're below the POC of that range. So it's likely that we're going to fill to the value area low of that range, which also happens to be a fresh monthly level at 132. We also have our pitchfork band of support coming in between in this general area. The 117 looks really good too. That's the bottom of the pitchfork band in confluence with the weekly level. The really bearish thing with MicroStrategy is, let me just zoom out. And I want to check something out here. Yeah, the skiff is definitely better respected here, so I would be keeping an eye on the skiff pitchfork. But you see this pitchfork was acting as resistance, and then you bounced from the lower band or the upper band, bounced from the upper band, and then you attempted to break out of the pitchfork. Well, once you failed to break out of that pitchfork and you fell back inside of it, I expect to come down to test the band now, this level. So I expect MicroStrategy to continue falling. Also, we had significant bearish divergences. Look at this on the weekly time frame. Higher highs in the price action, lower highs in the momentum waves, and your money flow is draining out. It's just crossing into the red on the weekly. Let's zoom in onto the 2-day chart, and I want to check this out. I mean, this thing is not money flow aggressively leaving in the red here. Now, NAMI is quicker, and money flow started to curve up, and we are confirming bull divs on the 2-day time frame. But these bull divs, we could still drop a little bit lower to actually hit that monthly level before seeing those bull divs play out. I think MicroStrategy is likely to continue dumping because we didn't see a swing failure pattern of this low. Let me throw that on there. This was our low from December 1st. And if you were going to come down today and take out that low, you would want to swing fail it and then push up. But we failed the swing failure pattern of that low. So it's likely that this dump is going to continue. And also look at this. 3-wave corrective move up. You probably hit your golden pocket. Let's pull our golden pocket. Yeah. 3-wave corrective move up into the golden pocket, and then you rejected. So you made a lower high, a corrective move into your golden pocket. You're rejecting. You expect to take out these lows. Yeah, we did now, finally. So I think this thing's going to keep dropping until we get to between 136, let's just say 136 and 132. Let me go on to the daily time frame. We can see if there's any sort of, I mean, we are at the bottom of this kind of daily order block here. We might see a small bounce. I mean, we're right at the bottom filling the order block kind of right now. Oop. I would think we're going to come down to around 132. That's where the value area low of your previous range was. And there's also a monthly down there. And let me make sure that monthly is still down there and fresh. Yeah, fresh monthly down there. This just looks very impulsive to me, guys. This looks like it's a 1, 2. We're going to be in a 3 and then a 4, 5. Now, here's the thing we can look at. From this low down here in 2022, in December of 2022, we can pull our golden pocket from the lows all the way to the highs. But because this is more than a 100% move, look at where your golden pocket's at. That's not the true 61% retracement. You got to come in here and turn it based off log scale because we are using the logarithmic chart. So you could drop as low as $55 over the next, because anytime you impulse, this was clearly impulsive price action. After the impulse finishes, in a sharp corrective move, you'll see like a 3-wave zigzag move down to the golden pocket. Just like we saw in lower time frames that I just showed you that. Like, let's zoom in onto that 4-hour chart again. We saw that 3-wave corrective move into the golden pocket right here. 3-wave corrective move into the golden pocket. So we could drop as low as $55. I'm not saying we're going to go there anytime soon. We would probably expect to see a major bounce before then. Let's actually pull this trend-based Fibonacci extinction. Come on, there to here. And let's look at, okay, actually at 144 is your 1-to-1 Fibonacci extinction. So that could be an area where you could see some sort of bounce from, but let me make sure. There we go. Okay. You're actually between the 1-to-1 and your 1.236. If you were going to see a corrective move, if this was going to be a three-wave corrective move, your most common targets to bounce are between the 1-to-1 and the 1.236. Now that we're starting to break the 1.236, if we close the daily candle, actually we've already closed a few daily candles below it, we can now look at this being more likely impulsive. You can also turn on your volume and look at how volume is spiking at the bottom. Its volumes was increasing on this dump to the downside here, this dump here. You do see a volume increase at the end of a dump on C waves. So if this wasn't like an A, B, C, seeing that nice spike in volume at the very end is kind of nice, but you want it to hold that. That bounce from that 1, 2, 3, 6 there, you want it to impulse up 1, 2, 3, 4, 5. But because we pushed up and now we're breaking below those lows, it invalidates any sort of impulse that we were expecting to see from that 1.236. That makes it more likely that this entire move is more likely to be a 1, 2, 3, 4, 5, something like that, impulsive price action to the downside. And what we can do now is take this trend-based Fibonacci extinction and we can look at our 1.618 level. 115. And let me turn this on to, based off log scale. Okay, so we might drop to about that 117 to 115 area. That's also the bottom of our pitchfork band of support. So we could be seeing all of this be our third wave. You might expect to get a major bounce from here and a corrective move up between your 382 and your 0.5 Fibonacci before dropping again in a fifth wave. Overall, seeing this as a wave 1, a wave 2, a wave 3, a wave 4, a wave 5. Man, this thing could get so bad over the next half a year in 2026. I mean, this MicroStrategy had a very, very risky model. Okay, I just saw a pattern most of the times January 1st. New Year has always closed in green candle. It's just a coincidence or something we don't know about. Well, sad 2725. I was showing on Bitcoin how in 2023, at the bottom of the bear market, you can see here, this was December 29th, December 31st. And come January 1st, we really started to push up here. Let's see where 2024 is. Yeah, I guess we were more in a range here towards the end of the year. And this actually looks more like what could happen, what we're seeing right now. January 1st. Was this guy right here. Why is that dotted? So I guess it was a green candle day. Yeah, we did push up on January 1st. I don't know. A lot of people do like to buy for the new year. They're resetting their portfolios. We also have to remember it's a Friday of a holiday weekend. So I don't, we'll see if it takes effect this year. I wouldn't put too much on it. Let's just say that. I wouldn't put too much on it. Jesus Save 77. God bless you, man. And happy birthday or happy new year. Sorry. Happy new year to you as well. Yes, we'll look at XRP. Yeah, XRP, we did see that. So this is the Coinbase chart. And this wick from October 10th on Coinbase only dumped to, what was that? 177-ish. On other charts, like if we go to the Bybit chart, you can see it dumped all the way down to like 116. But either way, what we're looking at is this bigger. Let me get back to the Coinbase chart. we're looking at this bigger sideways range in here. That's been your entire year, because look at this was December of 2024. So we've literally been in a big sideways range for a full year on XRP. But when we SFP'd the lows of the Coinbase crash, October 10th, remember when that happened last week? I was telling you guys I didn't like it because it was more of a double bottom rather than a true SFP. Yes, technically, we did wick the level. Look at 177.1, 177.05. So we did wick past the level, but that was it's more of a double bottom than an actual swing failure pattern. We did get a nice move up from it. Very nice move up, at least the scalp move up. But because it wasn't a true swing failure pattern, I think we could come down again and actually attempt to really swing fail this thing before seeing hopefully a push up. But we've been on XRP, we've kind of been in this descending channel. Now, this channel was just pulled from this high to this low. And I've been looking at this price action in here. And we've been just chopping. Now we're coming down to the midline right now. We might see a small bounce from the midline of the channel, and we did just take liquidity, internal liquidity. This is kind of what Bitcoin's 86.3 lows are. This internal liquidity of this small sideways range right here. You can see how we're starting to flatten out. This was pretty aggressive down, and now we're starting to flatten out. So we did take some internal liquidity, but we're not back above that level yet. We are bouncing, or we're attempting to bounce from the midline. If you reclaim these lows, you might be able to get a little bit of a move up here. I wouldn't be reading too much into that. It looks pretty bearish to me right now. And we might come down to finally grab those lows. Let's pull our golden pocket as well. Yeah, because we've already ran through the golden pocket right here. You can see we touched the golden pocket here. This golden pocket's been used up quite a bit. Let's look at our 786 Fibonacci. So yeah, we're hitting our 786 in confluence with the channel midline. Let's see, this might hold and give us at least some sort of a bounce. Look at that. Some sort of a bounce that's occurring at your 786 and your channel midline. And you might be able to bounce all the way up to the VWAP here. But if you reject the VWAP, I would expect to continue down. Money flow does not look good here on Market Cipher B, but NAMI is quicker. Remember, NAMI's quicker for the confirmations. And look at this. On the 15-minute chart, you do have bull divs and money flow curving to the upside here. So I would suspect we're going to get at least some sort of a bounce from this channel midline and from this 786. What I would do now is look at pulling a Fibonacci from the highs from earlier today, just the retrace of this dump, and I would look at the golden pocket. And sure enough, that's going to be right around your VWAP. So you might be able to get a push up to about 18.5 or 1.855. I would also pull the volume profile of this sideways range. So we have this flattening out sideways range. Let's pull the volume profile. You're losing your value area low. It's not good. Because we're losing the value area low, what could happen is you could bounce from this midline and the 786, backtest this. If you reject here, you expect to make new lows. So the first level of resistance you have to be watching now is 183.2. Or about 183. What is that? 183.17-ish. If you can get back above it, it's highly likely we're going to work our way up to the golden pocket at 185.5. But we are seeing a nice little reaction. Look at how perfect it bounced from that channel midline and that 786. Absolutely perfect. We saw bull divs on NAMI and money flows curving up. Market Cipher even showed some slight bull divs on the 15-minute, but that money flow looks really bad. Because the money flow looks so bad on Market Cipher B, we do have to watch for this. The rejection from the value area low. But if you did get that long, I mean, gosh, that was actually a pretty nice little long. That was very risky, though. Did we have, yeah, no bull divs on the hourly, money flow leaving on both NAMI and Market Cipher B. Let's go to the 2 hour. 2 hour looks pretty bad. Bear divs. Yeah, I would say with how bad the rest of these time frames look, Hidden bear div printed a couple days ago. I would say it's likely now that we're going to reject from the value area low. If we push up here, reject, and then continue down. It might happen like right now. Gosh, this thing's pushing. Elliott waves are very confusing. Elliott Wave International is a good place to learn it. Elliott Wave International has a website. The Elliott Wave Principles, a really good book. But the best Elliott Wave trader that I know is Coons Trading. He has a YouTube channel, actually, Coons Trading. So I've learned pretty much everything I know about Elliott Waves from him. And Andy from Bitcoin Consensus is really good at Elliott Waves as well. With ADA, for example, does the liquidity not work both ways on that bigger time frame? Or is that simply exit liquidity from the market? No, it should work as both ways, Caesar. So liquidity, because whether you're at the bottom of a liquidity, like liquidity from support or liquidity from the highs, there's people that shorted, on the macro time frame. There's people that shorted, and so they're going to put their stops above the high. So like, for instance, right here, look at this liquidity grab we got right here. This was a high, and anyone that shorted in this area, they took it down, they took the liquidity of the lows, and then they came back up to take the liquidity of the highs. And oftentimes in these sideways ranges, you'll get liquidity grabs on both sides. The market makers will like to stop out people on both sides. So you have your liquidity here. You had your liquidity. Let me just hide this for a second. You had your liquidity here from this, the end of the dump. This was a major dump here. So you came up, you grabbed your liquidity, or you made a high and you rejected on the bearish backtest of the POC. 3-wave corrective move, backtest of the POC. You actually grabbed this liquidity of these highs, and then you dumped. Now you dump down, you take the liquidity of the lows of the range or of your crash, and then you move up, and now you take the liquidity of the highs again. This high now. You take the liquidity, we move down. You don't necessarily are guaranteed to get a liquidity grab, but this time, we didn't get the liquidity grab. We didn't get a push below and a push back up. So, but yes, it works both ways. So you have liquidity resting up here, and now say we are going to move up from here, you're going to have liquidity resting down below those lows, because you're going to have people longing. Anyone that longs within this bottom move here, they're going to put their stops below that low. Glad I dumped my ADA. Yeah, man. Happy tax loss harvesting day. Yes, right? This is tax loss harvesting day for sure. COP USD. What is that? COP USD. Is this the right asset? Peso? Wow. Yeah, it is going up against the dollar, that's for sure. I see. COP. Yeah, I see your comment. Wow. Yeah, interesting. Happy New Year's Eve, brother Nature Joe. Thoughts on AVAX? Yeah, let's look at AVAX here. And sorry, I know this chart is disgustingly messy, guys. I don't have an object tree organized here, but I will say this. AVAX. Let me just get rid of some of this stuff in here. Okay, we starting to reject from this box. We did wick past it a little bit, but this was our box of resistance we were looking at. And here's the thing with AVAX. So we've been in a sideways descending channel here, this pink channel, and we're starting to see the selling pressure calm down here, right? We had very aggressive selling pressure here, and now it's starting to go more sideways and down here. So we're starting to find a bottom, at least some selling exhaustion on this. AVAX could actually be in accumulation in the making. But look at where we bounced. We bounced from the support that we marked out. It was a daily order block. It was the bottom of the channel. Yes, we did wick past the bottom of the channel to hit that daily order block and that daily level. And we're seeing a nice little move here from that. We're pushing up, but here's the thing with this volume profile that's been since for 2 weeks now. Unfortunately, we tried to break out of the value area high. Tried to break out of the value area high, back tested it, confirmed a flip to support. So now you expect to take out this high, and we did. We came up, took out that high. But now that we're falling back inside the volume profile, we fell back inside it. We bounced from the POC. We bearishly back tested the value area high and your channel midline and your pitchfork, and you rejected. So I think we're going to continue down here because let me zoom in a little bit more here. You see, break out of the value area high, back tested as support. You held it as support, so you expect to make new highs. We did. But then you fell back inside your volume profile. You fell to the POC. You held the POC. You bearishly back tested the value area high, your pitchfork, and your channel midline. You rejected on the bearish back test. You also rejected again on the bearish back test. So now we're dropping. I would expect to drop. Let's actually look at this. Pulling our golden pocket here. Let me get rid of these. From the lows to the highs. Yeah, this golden pocket is pretty nice. I would like to take out this liquidity here at 11.85-ish. 11.84. That liquidity there would be nice to take. And you have to say that this does look like more of a three-wave corrective move here. So if that's a three-wave corrective move, eventually you plan to take out the low. This should be impulsive price action down to take out the low. Now, within this move, look at, you have a flat in here. You took out the highs, then you took out the lows. So within your, say this is an A wave here, you have a B flat in here, and then you have your C wave, which is an impulse. Okay, and then now we're looking for a wave 1, a wave 2, a wave 3, maybe to come take out that liquidity, a wave 4 to back test that value area low, and then a wave 5. Actually, this wave 3 could probably extend a little bit further, but you're looking to now push down here. Let's look at let's update the levels on this. So let me just get rid of this for a second. I just want to clean this chart up for just a bit to look at some things. So we hit the daily level. We hit the daily order block. We bounce from the daily order block. But you're losing your pitchfork. This is not good here. So let me zoom out to the daily. I'm going to hide this channel for a second. And look at this pitchfork. So we rejected, by the way, I called the short right here, right at $36. I called the short. We had a liquidity grab into your logarithmic golden pocket at the top of the pitchfork band, or at the upper pitchfork band. We were looking for a rejection from here. Also, this looked more like a three-wave corrective move. Or you could even say a 1, 2, 3, 4, 5 here, but you would expect some sort of major rejection from up here. But that was the upper pitchfork band. We've worked we dropped to the lower pitchfork band on that crash on October 10th. And we've just been in bearish market structure. And look at, we were at the bottom of the pitchfork here. Let me actually zoom in better here. At the bottom of the pitchfork, this blue line here, and we were consolidating at the bottom of the pitchfork. What you wanted to see is a push up, a break of this range. But now we're breaking it to the downside. If you were bullish, you wanted to see a break to the upside. We're breaking it to the downside. We bounced from support, but now we're bearishly backtesting that pitchfork, and we're starting to reject here. Multiple days of a backtest of the pitchfork right here. 1 candle, 2 candle, 3 candle, 4 candles, and even today, 5 candles. 5 days in a row, we've been backtesting this pitchfork, and we're not able to get back inside of it. It tells me that we are going to continue down here. but you could range for a bit sideways before coming down. Honestly, it's really sad that AVAX is breaking this pitchfork to me. Really, really sad that we're breaking this pitchfork. Let's just look at, first off, we're going to get rid of some of these. Okay, and on the daily time frame, that's still a fresh daily level there. That's our local resistance above. We still have a daily and a 786 up here. That 786 is going to be, yeah, still the same. It is starting to look nice, though. Look at this. Big daily low here, big daily low here, big daily low here. So you have lower lows in the price action. You have higher lows in the momentum waves here, and your money flows curving to the upside on the daily. Yeah, we need to see this general area hold. I want to see a sideways range start to form. Like something similar to this, but we want to see it hold. We want to see, and even making one more low would be nice. This could be the start of a major accumulation, though. This could be like your left shoulder. This could be your head, but you want it to break up to here first and then see a right shoulder come in, seeing that rounded bottom and seeing this overall range form here. Because we still could get back above here, but we need to do it like almost immediately within the next week. We need to get back above the pitchfork, back inside the pitchfork. If we don't, we're going to keep dropping, and let's just go to the weekly. I mean, there's nothing in here, guys, that we have a daily level at 10.3. Remember, this was our daily order block that we bounced from. We've already used up that. Now it's kind of that life has been used already in some aspect. That was a nice little daily order block. Yeah, this guy right here that had been partially filled already. All right. This order block is nice, though. The bottom of the order block at that daily level, 10.3. That's all that's left. Look at in between there, green candles. There's no real structure in here. You would expect to fall down and take out those lows. At $8.62. AVAX is not looking good right now. So the next major level of support is 10.3 for me. And then you could play within this small rise up here. So if we zoom in onto like the 2-hour chart, you could just analyze this here. So, once again, pull your volume, pull your Fibonacci from the lows to the highs. You're going to be looking golden pocket here. I would be looking at the 786 as well, because the 786 is below this liquidity. We could look at this sideways range. Yeah, and you're rejecting your value area low of your prior range. Okay. If we extend this range, you can see this dumping here was very, very aggressive. And then we started to kind of started to calm down a little bit right here. So what I would say is you could look at this as a range. It's better to look at this as one range. And unfortunately now, like this as one range, with that being a fake out of the range highs. But if you want to combine them together and look at it as one range, the value area low of this bottoming price action in here, potential bottoming price action, is going to be where your golden pocket is at, 11.93. I mean, that kind of has to hold. And your hope would be that you would have this overall be like a wave one wave 2, an internal wave 1, an internal wave 2, and then you would want your big 3. So it would be a double 1-2 impulse. But unfortunately, that's not even looking good because this is a flat in here. Your secondary wave 1 is longer than your initial wave 1. You don't want to see that. It lowers the probabilities. Yeah, and so in the scenario that we are going to see a support come in a higher low from this low, if this is going to be a 3-wave corrective move, your levels to look for between the 1-to-1 and the 1.236. So they both have good confluence because the 1-to-1 is close to your value area low in your golden pocket, and the 1.236 is right where your 786 is, and it would grab this liquidity. So very, very locally, you could consider this a support level, and this is support level. Okay, let me see here. Yeah, Steel and Stone, welcome in, man. It's good to see you. And Sudeep, welcome in. Hope you have a good New Year, Sudeep. Message deleted by Sudeep. Okay, Matt, I don't see. I see you did a super chat. I don't know what the super chat said. Sudeep, I see that you put him in timeout. What was that super chat? Was it just shilling a project and stuff? I trust you, Sudeep. So if you, and I know you're experienced with this, so Crypto Clan World also. Happy New Year to you, man. All right, hold on. Let me see. I'm way behind in the chat. Just get the book. With Ada, for example. Okay, we did that. Glad I dumped Ada. Okay, got that. Okay, wait. Happy tax loss harvesting to you as well. God bless USA for this one. I'm wondering what the downside could be, fees aside, for selling losses for better entries. If you're talking, Caesar, if you're talking about spot right now, selling to look for better entries, the higher probability on Bitcoin, it's not guaranteed, but the higher probability is that we are going to come below 80.5K. The higher probabilities we're going to come below 80.5K. But what I would wait for then, within this, we could be looking at a bigger flat correction in here, a bigger sideways correction. So I would be looking to sell near the highs of the range. So what I would do is pull your volume profile of this entire 6-week range, this volume profile right here, and you can see at the value area high, we have a lot of resistance. So between 91 and 91.5 is where I would be looking to sell. We might even come down first and then come up here and still stay within this range overall. But if you do reject from 91.5, that's where I would be selling to look to buy it maybe, 78, 77K, or even just that 80K if you SFP that. The thing is, we might push up to test these highs again, so I don't want to tell you what, you could say, hey, I'm going to sell at 91.5, but say it breaks through it and we continue up to 96. There is a possibility we could hit 96.5. Now, if we hit 96.5, that for sure would be an area where I'd be interested in selling to look to come to take out the lows. HNY. Oh, that's Happy New Year. Happy New Year to you as well. God, my brain stopped working. Wiggly Warm Crypto, Happy New Year to you. I bought more silver today. Oh, guys, by the way, on silver, remember we covered this last week. Okay, and the Elliott waves are playing out so perfectly on silver. So let me go down. Let's just go to the weekly time frame. I was telling you guys that we're likely to push up. Remember, we were at like $70 when we were covering this the other day. Um, when was that? I think that was last Friday. Last Friday, right after Christmas. We were around 60 or $70. We were right at the top of the pitchfork, or we were just breaking out of the pitchfork. But I said, I think we're going to come up to $81 to $82. And we came up to 81 to 82. We hit that macro 1.618. I think we could drop to $50, guys. 47 to 50 to $46 here. Because what we're looking for now, let's zoom out to the 3-day time frame. So I'm going to buy more silver. Well, first of all, at about, what was that? Hold on, let me make this the skiff pitchfork. That's the one we were looking at here. We were breaking out of the skiff pitchfork right at like $65, $67. I said we were going to come up to $81. But we're looking at a bigger impulsive structure here, right? So this was a wave 1, this was a wave 2, and this was our wave 3. And remember, we were starting to go really parabolic here. And I said, guys, be aware. Gold went really parabolic and then it dumped for a while. And I said, looks like silver, if we get to 82, I would sell and I would look to buy back. And that's exactly, so wave 1, wave 2, our wave 3 hit perfectly the 1.618. And now we're starting to dump here over the last couple days. So now what we can do is you're going to pull your Fibonacci, from the lows of wave 3 to the highs of wave 3. And you're going to turn on your wave 4 targets. They're between the 0.382 and the 0.5 Fibonacci. Now, this is more than a 100% move to the upside. You want to turn this based off log scale. We're also on the log chart. So you're looking for, in this wave 2 corrective move, took about 744 days, around somewhere around there. What was that? 754 days. So we could see, because your wave 4 moves are often as long or longer than your wave 2 moves. So if we got a wave 2 correction for a few years, we could see silver correct for quite a while here before pushing up in a wave 5, and that wave 5 might hit like 120 or more. So $81, $82 was the level to look to sell some, and this could be a significant retrace, a slow, arduous grind sideways and down for some time. If we do come back down to backtest the pitchfork and start to bounce around, I think it was $66, $65, $66, you might see this, a bounce here, a little bit of a lower high, then break into it. You're probably going to see something like this, grinding sideways price action, sideways and down, until you get to around that 382 at $46. At $47, or really $48, you have a daily level in there. And then taking this liquidity here at $45, I just think that we could see some sideways and down on silver for a while. But we were calling this out before it happened, that level. Yeah. I haven't, Dr. Rex, I haven't seen the AI guy about silver. But you're buying more now. Okay, interesting. Now, I have to say, be careful with that, man. Be careful with that, because technically we are hitting major targets where you would expect a major pullback from. Even if it's going to be a sideways range in here and then down for a bit, you would expect some significant sideways and down over the next year or 2 years. I think I moved my stop loss into profit. Oh, AXSCB. Yeah, you're moving your stop loss into profit too early. I see. Well, you got to get used. You got to be okay getting stopped out. So if you're moving your stop loss into profit too early, it might be because you're risking too much per trade. So make sure you're actually calculating your risk management properly. And I understand what you're saying, though, because I do try to move my stop loss at least to break even as soon as I can, but I usually move it after my first TP. So wait until you hit your TP1 and then move it to break even. That happened in a 1 minute candle on silver. That's a 1 hour, but yeah. I mean, look at the significant bear divs that we were seeing on silver. Actually, on the higher time frames, we're not really seeing the significant bear divs, but on like 4 hour and under, we were seeing pretty bad bear divs. No, not even on the 4 hour. On the, what was that? Yeah, 2 hour bear divs through here. So you can see higher highs, lower highs. Money flow started coming out. Bear divs, and look at the money flow bear divs. Boom, boom, boom. That's pretty bad. So coming to $82 though was, I said it last Friday. If you guys don't believe me, go watch the live stream from last Friday. I said that was an area where I would definitely be taking some profit. Why does Michael Saylor keep buying the tops rather? You know what, Apollo? I've asked myself that question for years. I do not know why Michael Saylor does what he does. Where is Michael Saylor getting the capital to buy Bitcoin? Well, what he's doing is he's issuing bonds. It's like an IOU from the company or a promise of future profits from the company. And he gets bonds at like 0% interest. And then he just takes that money from the bonds and buys Bitcoin. It's really, in some ways, sort of a Ponzi scheme. The XRP ETF help price not even a little bit. Yeah, it is weird. Caesar, thank you, dude. I appreciate that. Andy doesn't understand properly the concepts. He shouldn't be pontificating until he gets it. I like learning from Andy and Trader's Reality. It feels like it's going to Hogwarts. Okay, I'm sorry, guys. I'm so far behind in this chat. I do got to get going soon here. In about 10 minutes, I got to get going. But Happy New Year, Sudeep. Baby Genius, welcome in and cheers to you as well. We are getting the bullish divergence on the 5 minute on Market Cipher. What is your take on Bitcoin? I think you mean on Bitcoin. Let's see here. Oh yeah, we're starting to try to reclaim the POC here of our little mini range. I mean, we might come up to VWAP. I would look at if we can start to close. We might come up to VWAP and reject from VWAP. But I still think we're going to come overall. We're going to come take the liquidity around 86.3. Yeah, you're just chopping around VWAP right now. It's probably going to do something like that, like this, where we got the initial push down, and now we're going to start to see this thing kind of grind for a bit until we take that liquidity, seeing like some sort of descending channel in here. Or even a push up to VWAP, and then if you reject from VWAP, you expect to continue the bearish momentum. Okay, Dr. Rex, that Asian guy, do you know his name? Mitch Ray. Okay, thank you. Was also talking about that. Yes, Dr. Rex, can you maybe DM me one of those videos that you were talking about if it's not too much trouble, or I'll look up Mitch Ray. Let me see here on YouTube. Yeah, I will check that out in a bit here. There's a solid firm that's projecting another run up after the heat dies down. Okay. Because at the top is when he can raise the most. Yeah, at the top is when he can raise the most money with the hype. No one wants to buy bonds when MicroStrategy is crashing. You're absolutely right. Bansbell, he does. He plays on the FOMO of retail. So they're buying those bonds when Bitcoin is doing well. Sailor's plan is to replace the banking system with Bitcoin, so dollar trending to zero. Here's the thing, though. If Michael Saylor screws this up, he could literally be like the downfall of Bitcoin for quite a while. Like if he starts to go under on his Bitcoin and is forced to sell it off, or I think it's January 15th, this major index fund, I can't remember which one it was, they might be delisting MicroStrategy from their ETF because it's over leveraged in crypto. So if they are forced to sell some of their Bitcoin to meet that standard of less than 50% of your treasury in crypto, that could be a major catalyst for Bitcoin crashing. Oh, is that Mark Dutch? Welcome in, man. Happy New Year to you and your family, Divinehood. Thank you, dude. Happy New Year to you, and God bless you, man. Thank you so much for the super chat, and I hope you have a good New Year. Hope you have a good night tonight. I really appreciate this, man. Mixray is also a crypto YouTuber, but they were talking about this knowledge. Dr. Rex, I am on Discord under Divinehood as well. I'm in Jason's Discord. I'm in a couple other ones. But if you're part of the Telegram, you can send it to me there. If you're not part of the Telegram, maybe I'll try to look up Mixray here and see. But Mark, thank you so much for that super chat, man. And I really do hope you have a good New Year. Thank you for being here. Thank you for always modding for me and just being such a great person for the crypto YouTubers. You know, it's awesome. Yeah, Mark Dutch is from Andy, from Coons, from everyone. I think he's with Jason as well. Frankie Candles, Mark Dutch's mods for all the best guys out there. Yeah, no over leverages. It's about the balance sheet asset. Yes. Okay, S Fortunes. Okay, thanks, Dr. X. We still have 90 minutes until 2026. Oh, wow. Okay, so for me, it's a little bit longer than that, but yeah, but you guys, I really do hope you all have a good New Year's. And Mark, I know you just got in here, but I have to take off in about 5 minutes here. Thank you so much for coming in here, Mark, and really appreciate that super chat. God bless all of you guys, all my mods. I really appreciate you all so much. Thank you for being here and helping out with the chat, help keeping things clean and nice in here. 2026 is going to be great, you guys. I think 2026, whether it's a bear market or not, we can still make money both ways. And it's about marking out the levels and executing on the trades. So that's the great thing about being a derivatives trader. We can play the market both ways. We really don't care what the price action. Now, of course, we want it to go up because we all have spot. But as far as scraping a little bit of money away from the market every single day and building a portfolio, that is something that we can do here with this YouTube channel and with the year of 2026. So I hope you guys all join me next year for 2026. I really appreciate all of you guys all so much. Yeah, I'm going to check out Mixray. That's interesting. Legend in TA space, certainly not Asian. Okay. But you all have a good New Year's. Much love to you all. Thank you, Mark Dutch. Thank you, Sudeep. Thank you, Samuel S. Abir, you as well. You guys be safe out there tonight. Mark, I do plan to light off some fireworks tonight, so I'll let you know how that goes. Hit the like button on your way out, guys. I appreciate y'all so much. Be safe tonight. And I will see you. I might stream tomorrow. I'm not sure. If not, I'll stream Friday. But thank you guys all so much for everything. And I will see you next year.